right. Well, let me get you here. There we go. What's going on, everybody? Chris Franks with Texas West Capital. Always great to see you all here live on Fridays at 11 a.m. Central, 12 p.m. Eastern. Let me just kind of get everything set up here. Man, oh man, what a morning, right? Do me a favor real quick before we go here, y'all. Hit the thumbs up, hit the like, hit the subscribe, share the link. Share the link. I feel like I got to beg for this every week, but I very sincerely appreciate those of you that do. It helps give creators like myself who don't necessarily have the biggest marketing mouth out there, get our information out there. And I like to believe that, I provide a much better analysis than what most do out there. If you're new, stick around. You'll find out. I've been pretty consistently correct for years now. And it doesn't mean I'm always correct. Nobody's going to be. But, the idea is to be more correct than not and to have some good risk management when you're not, right? So, Troy says, like button has been mashed. I appreciate you, my man. I appreciate you. Anyway, yeah, so jobs data came out today. Now, you can ask everybody in TWC. I've been pretty probably annoying as heck, warning them all week long to be ready for that volatility that was likely to come with that release. And really, it didn't matter whether it came in line with expectations or whether it was soft or whether the numbers came in hot. You were going to get pretty good volatility, most likely. And that's exactly what we saw, because everybody's kind of harboring, harboring feelings around what's coming up here soon with the Fed and their interest rate decision. And so that's coming up over here in the next few weeks. I've been pretty loud about the fact that I believe we weren't going to have a rate cut until September this year, which is where we're at now. A few weeks back, well, I guess about a month ago, when the jobs number came in, I mentioned that, the Fed has the two-prong dual mandate there, which is basically jobs and price, right? So you're talking about unemployment and interest rates. And of the two, because jobs are at their historical lows, basically, the interest rate for prices was the more important of the two. And I said, with the numbers still coming in hot as far as the not interest rates, but inflation goes last month, I said we would need to see another month or two of, really bad misses on the employment front for the Fed to probably, before the Fed really feels like they've got to cut. And so here we are again, and we're going to talk about those numbers, which were not pretty this time around. Okay. Just like last time. So last time we had the big miss, and then we had the bigger revisions for the previous, for the other 2 months. We come up this time around. Jobs came in at 22,000. We were expecting 75,000. All right. Now, if you subscribe to the market breakdown, then yesterday's market breakdown that you got kind of laid it out for you. And it said, listen, if we get a drop in the dollar and interest rates stay below the 4.3, the 2-year, 10-year stays below 4.3, we're likely going to see a bullish move for stocks and for Bitcoin overall. Okay. This isn't we're not talking about the knee-jerk reaction, which we have, but overall. And so I'll tell you what happened with that in case you haven't already looked yourself, but it set the stage for what to expect, right? And so anyway, non-farm payrolls, there we go. Like I said, came in at 22,000 this August versus the 75,000 expected. The unemployment rate was expected to move up from 4.2 to 4.3%, and it did. So unemployment came in line with expectations. And even though it did rise to 4.3%, again, historically, we're near historic lows. Again, the Fed looks at basically that 5% area as as fully employed, because there's always going to be, basically they expect there always to be around 5% that's unemployed. So, as far as that goes, we're well within that unemployment area is looking at, but nonetheless, it has gone up, right? We went from 3.9 to 4.1 to 4.0 to 4.2 to 4.1 to 4.2 to 4.3. So we're starting to inch up, and we're doing that with inflation still being kind of strong out there. And so for the Fed, they're kind of stuck in this thing, because you want inflation to continue to come down, but at the same time, you need employment to not go up, right? To unemployment not to go up. But they've had a lot of pressure, to lower rates for a while now. I think today's numbers are going to give them what they need to actually come down. We'll see what the CPI says. I think CPI is next week. Yeah, maybe I have to check again. But coming up here, we'll see what the CPI is and whatnot. But the Fed could hold off potentially one more month. I don't think they will. I think they're going to go up. And so to that extent, we do have the CME Fed Watch tool, which shows 100% agreement that Fed's going to drop the rate. They've got 88.4% thinking they're going to drop it a quarter of a point, 11.6% odds that they're going to drop it half a point, 50 basis points. Okay. So it looks like we'll get, again, 25 basis point rate cut most likely. And then when you look into the next few months coming up with it here, let me see if I can find those again. October says a 75.5% basically odds of the what do you call it? Another quarter point cut. And then we've got December right now saying 70.8% chance of another quarter point cut. So basically right now the markets are pricing in 3 quarter point rate cuts for the end of the year. Now we'll see how that turns out as the numbers continue to go, but I do think we'll probably get it. At least for September here. And then we'll see the PPI and then the CPI coming out. And that'll and then the PPE, and all that kind of stuff coming out for what we're going to see for the next month and the jobs there. Again, we should probably get, I believe, a quarter point rate cut this month. And if next month's jobs come in just continually as bad, there's little hope that they won't, that they'll keep it flat or raise it. They'll probably, again, cut in, in November. So we had 22,000. We were expecting 75,000. Unemployment in July went from 4.2 to 4.3%. Again, that was expected. It is a new 4-year high though. So we have been below 4.3% for about 4 years, guys, since basically back there during the first year of the pandemic. So we've been just ostensibly low with the with unemployment for a very long time, guys. Like I said, if this is not the longest period of as low as it's been, it's got to be the second lowest or second longest. It's got to be close to the longest period we've had. So there's something to be said for that. There were some revisions. So June, I think, came in at with the revisions came in at negative 14,000, so a 14,000 job loss in June. So contraction, not growth in June. And then July were revised upward, I think around 20 or 22,000 jobs. But June was revised downward below zero. So we had contraction, in job growth there in July or in June. Average weekly or average hourly earnings, which is the other thing that the Fed watches, they rose 0.3% month over month and 3.7% year over year. Now, this is important. Your hourly earnings, which I don't see a lot of people talk about, I talk about every so often, is important. And the Fed watches it because if you've got inflation, if you've got prices rising, it's not as big an issue if you have those average hourly earnings keeping up or surpassing it, right? So if you have greater average hourly earnings than what the rise in inflation is, the rise in inflation isn't quite so bad, right? I mean, at least in terms of you should have more, more money to spend to stave off that increase in prices. Now, like I said, we've got the interest rate cut expectations are up again. So It is. So I was talking earlier about what we needed to look at, right? One of those things we need to look at was the treasury yields. And so the 2-year dipped to about 3.47% and the 10-year down to 4.08. So those were 5-month lows. So the 10-year was 4.2 and some change yesterday, dropped down to 4.08 today. So there we go. We have the yields coming down, which is what I talked about we needed. We're also looking for the dollar to weaken, right? Well, at least the yields to stay below 4.3%, really. And we were looking for the dollar to drop down. And so the dollar dropped nearly 1% against the yen and the Swiss franc and 0.79% against the euro. So the US dollar weakened across the board as well. That was the other thing, okay? That was the other thing we needed. So with those things coming in, I believe that we should see cryptos rallying overall, and we should see, stocks continue to rally overall. Let me see here. What else do we have? Let me look at my notes here. Yeah, so like I was talking about, that weak job growth that we saw and then that rising unemployment, even though unemployment is still historically low, it is continuing to rise, basically inch by inch. So that together kind of gives the Fed a better justification to actually cut interest rates, as soon as, again, this month. And if you've been watching Powell, he's been very adamant about, I don't want to do this. And I think part of it is obviously he wants to stand up in the face of Trump. That's one thing. But at the end of the day, as we've been talking about, the interest rates, the inflation and the jobs weren't giving him reason to do it. But now, again, I do believe we're probably there. Let me see here. So I think, again, we'll probably get into a new monetary easing now. And so, if you've been looking for the interest rate to drop and whatnot, I think you can probably more or less bet on that now. Let's see. The yields for the bonds are falling. So that's going to make borrowing cheaper. If cheaper borrowing, then equities should get a boost. Again, that's what I was talking about with the interest rates coming down there. And that's most especially when you're looking at things that are interest rate sensitive sectors like housing, consumer discretionary, stuff like that. So you can probably look in those areas to see some boost from those interest rates, bond yields falling. We can look at mortgage rates continuing to decline. I think if you're looking like at gold and other, whatever you want to call, safe havens, I think they're going to continue to look good for now. And I've got some gold stuff I want to talk about that I'm going to show you guys some charts there here in just a bit as well. Let me see here. The real concern comes with that slower job growth, and you have that stagnant. If that wage growth continues to remain kind of stagnant, doesn't really continue higher, that'll probably show that consumers' confidence is going to take a hit. And if that's taking a hit, you're going to see less spending. And so that isn't necessarily telling you what's going to happen, right? By now, but it means that you do need to pay attention, because that runs the risk of a longer term kind of softening, right, into that broader economic kind of slowdown. Let me see here. Of course, with the jobs and everything going on here, you're going to expect to see Powell and the Fed over there getting probably just ripped apart by politicians. The administration's going to probably double up on their attacks to get them to drop interest rates and whatnot with that. Let me see here. So yeah. So we've got now with this second month here and what's been going on in the revisions and the big misses, we've got this, what I'd probably consider a significant labor market cooling. And so that's going to, again, strongly increase the anticipation of the Federal Reserve easing their policy. And when they do that, of course, financial markets going to respond accordingly. But I think the bigger thing that you have to watch out, this is all kind of shorter term stuff. I think the bigger stuff you would need to take away from that is that you're going to have to watch that economic momentum. It could potentially be slowing down significantly. Look at the stability, political stability, what's going on there. Again, I think, the administration's going to up their attacks on the Fed. And of course, that all then gives us the longer term growth prospects probably coming down with that. So, today's jobs report really just kind of a continuation of what we saw last month. And that last month I'd said, listen, if this continues, we'll probably get what we're looking at now, which is a rate cut and potentially more rate cuts coming in. All right. So that's what we're sitting. But if you're looking at the charts are already telling you all this, right? I mean, that's the way it should be. Right? Here's the thing. Even if you consider yourself a fundamental trader, right? Fundamentals, not charts. You should learn to read charts, because the worst thing that can do is give you support or warn you of where you may be wrong in your fundamental analysis if you learn to read charts. And that's why I teach people to read charts, right? Oh, speaking of which, hey guys, listen, we're doing a quick sale right now. If you want to jump in on our Liquidity cartography group, 55% off. Use 55 off. The number 5, the word off. 55 off. I'm not sure how long I'm going to keep it up there. It's probably not going to be too long. So if you've been wondering what we're doing over there, if you want to learn what I teach, if you want to learn what Fibbo teach, if you want to see what our traders Vince and Andrew are seeing and what they're trading and the possibilities there, I'm telling you, won't be sorry for that alone. Jump on it, guys. Get in there ASAP because I don't think I'm going to keep this up very long. It's a big discount, but it gives you that opportunity to get in. And by the way, it is a recurring discount. It's not just a one-time. So if you get in one time here and you like it, you want to stick around and keep renewing, it's going to renew at that 55% off. Oh my gosh. So jump in there and do it. Anyway, let me see here. Fibbo says technicals are king. Fundies is where the fun dies. And then he invited you to come at him, bro. By the way, Fibbo said it looks like he'll probably be able to join me next week. So you guys jump in there, all right? Let me see here. 55 as in I can't drive 55. I appreciate the song reference. I'm a big fan of the group. Fibbo is saying, look, I'm going to put it up here so y'all can see this. That way you can't blame me if he's not. He says, I will be here next Friday. All right. So there you go. Anyway, so let's go ahead and jump in here, guys. Let's look at some charts. I'm not sure how long I'm going to be on here today. Let me jump in down here. So here is Bitcoin. And so right now, again, what I'm really looking for is an impulsive daily candle breakout and close above the monthly pivot here at around 113,329. That's on this Bitcoin all-time history index. So whatever that monthly pivot on your daily time frame is on your chart, it should be right around that 113 area. We're looking for a daily candle to break out impulsively and close above it. If we do that, odds are the low is in, and we're going to break out to new all-time high. Breaking out above the 117,440 area is going to add confidence to that idea. For me personally, just on the height of the pullback here, just based on the height of the pullback, that gives us a pattern target at 135,611. But if we can get that, I'm currently looking more along the lines of 155, that kind of area, as our next target. Okay? So that's what we're looking for there. All right. It's not a lot of, if you're fearful with Bitcoin right now, I don't think you're looking at the chart. It doesn't mean we can't go down lower. And as I've been talking about, if we do break down lower here, our initial target right now through the end of this weekend would be 105.9. And below that would be this 102, 400 area, which still keeps us, well within this support right here. That you can see that low volume node kicks in right below that area there. So even if we were to break down further there, for me personally, I'm looking at that as a reason to go long, to add more to a position. Okay. Yeah. Revi, Chris, for the trading course you offer, can I pay monthly? Yes, you can pay monthly. Yes. Jump on, use that discount, use that code, get in there. Okay, you get 55% off the monthly, and that's a huge savings, guys. And just kind of doing that out there to, again, the price we charge for what we do is really at the low end of what our competitors charge, and we do a lot better. Mr. Awesome is here. You saw him talking there, Mr. Awesome. Anyway, he shows up all the time for all our daily training, our daily tradings, 3 days a week, our live trading, and then shows up 3 days a week for our trainings. And he lives across the water over there, guys. So if this man can do it, you have no reason not to do it. But he does it all the time. And I'll tell you what, he just absolutely killing it. Absolutely killing it. Just, I can't be, more proud. It really just absolutely insane how well he's doing it. There he says, my trading changed for the better. He just jumped in and said that there. Sats McGee comes in. You see him here all the time. He joins everything as well. Finds time to make it in there. And even if you can't join the lives, guys, you can always watch the recordings. That's the whole thing. But you got to put in the work, right? You can't buy something and then just expect it to work without you actually putting in the work. But if you can, we have so many great people that have done so well because of it. It's hard to see you not doing that. It's really hard to imagine that not happening. So, you do what you need to do. But I would say, listen, if you're really serious about wanting to learn, why the heck are you waiting? Absolute best time right now to jump in there. And you get everything. You're going to start learning how to map out what's going on with the markets, guys. Does that mean you're going to be 100% correct all the time? No. Nobody's 100% correct, guys. But that's why I hammer home the importance of proper risk management. And these guys like Jonathan, like Sats, like others coming in there, okay? They're seeing they're seeing the results from that. Sometimes you have to go in there and you have to force yourself to do it and go, oh my God, okay, yeah, I don't need to actually over leverage and oversize and all these stupid things that cause me to lose money, because that's what you're most likely doing. That's what we all do when we first come into trading. We think, man, how quick can I get my $100 to $1 million? So I'm on 1,000x leverage on my full size and pray to God it doesn't pull back one tick along the way and instead goes up 1,000%, right? But that's ridiculous. That doesn't happen. So you have to learn how to trade it properly, guys. Okay? So I'm just saying. All right? Casimoto, the Lone Wolf, says 1024, also their long zone. Yeah. I mean, it makes sense. It's perfectly clear. Makes sense if we can't break that monthly pivot. But I'm telling you, if we break that monthly pivot up right above us, then we got rejected it today. We do it with a daily candle. And what do I mean by impulsive breakout? I mean a largish candle spread compared to the candles around it, right? And a spike of volume greater than what you're seeing around it. Those two, and then you need to close above it. And if you can do that, the odds are you're going to be good to go. The odds are the low is most likely in. But just watch the next level up as well if you want more confirmation of it. Okay? It's these are things, there's reasons for that. I teach it probably that same thing I mentioned over and over and over again, just about daily over at TWC. But again, guys, TWC isn't about learning Wyckoff for Wyckoff's sake. It isn't about learning Elliott Wave for Elliott Wave's sake. It isn't about learning SMC for SMC's sake, right? It's about understanding why those things work. Yes, you're going to learn them, but in the process of learning them, you're going to understand why they work and how they work together. And then we throw in, I often talk about pivots in there. And we throw that in there as well to help you understand. You start seeing now a picture developing of how and why price action moves the way it does. Why have I not been bearish since that $15,000-$16,000 area when I said it looks like the bottom's likely in? New cycle started, new bull cycle started for Bitcoin. And you have all your other influencers out there, your KOLs and whatnot, talking about the top is in, the top is in, the top is every freaking 3 months. Every time price goes up a little bit and then goes sideways, oh my God, top's in. And they're continually wrong, right? And I've never talked about the top being in because there's nothing that's happened that says that the top is in. And you have to learn to do it. You're not going to get, I tell you right now, you are not going to get on a multi-year cycle and tell me on the 15-minute time frame when the top's in or the 1 hour time frame. It just doesn't happen. That isn't how it works, guys. You can guess, but your guesses are likely to be wrong. But people are going to guess and they're going to sound very enthusiastic and very sure about themselves. And it's going to make you want to believe them. And then you're going to get screwed, right? So you want to be careful out there. Even Fibbo says no top yet. What do we know? We've just been doing this for a total of, what, Fibbo, 55 years, something like that? Going on 60 years between the both of us? That's a long damn time to be in the markets, guys. And that means we were around a long time before crypto ever came out. Crypto's not special. Crypto follows the same, movements as any other market, right? That's the thing you got to understand. Too many people are going to try and convince you that crypto's different. No, it's the same people coming in, doing the same things, trading the same ways. So the thing that Fibbo and I bring to you guys over at TWC or anywhere else we're talking is that we've got experience. We got experience in equities. We got experience in futures. We got experience in FX, Forex. We've got experience in precious metals, energy. We've got experience in crypto. Okay? There's only so much that you can get from somebody that just started a couple of years ago, no matter how talented they are. If they've only got a couple of years in the market, especially if it's just the crypto market, guys, there's only so much you can get out of that. It really is after you've gone through real economic downturns in markets, not just bear markets in crypto, but we're talking about real economic downturns. We're talking about, God, Fibbo, what have we been doing? We've been trading. We traded through the dot-com bubble, through the Great Recession, just through multiple things coming up here. I'm going to tell you right now, there's something that says for that, right? So anyway, that's what we're doing. Like I said, use the code 55OFF. The number 5 twice, 55 and off. It's for 55% off. Jump in there and get it while you can, because I don't want you crying to me afterward saying, oh, I missed it. I didn't realize, or I forgot. Well, I'm sorry. If you want to get in, if you want to be a part of this and be a part of the group, man, holy crud. We got a tight group of members in there that show up all the time for everything we're doing. Those are the people you want to hang out with. Those are the people that together are going to make your trading that much better. Okay? So anyway, so Bitcoin, yeah, not hating it. Again, if it does break down lower, probably getting around that 102, 380, 400, whatever, around that area. But again, if we can get that daily impulsive breakout and close above that 113, 329, we should most likely be good to go up higher to your new all-time highs there, okay? Let's talk gold. I put this out there and I rattled a few feathers, guys. I rattled a few feathers. So here's what I'm looking at since the 70s, right? This chart here, this COMEX gold chart. To me, it shows a 1, 2, 3, 4, and then 1, 2, 3, 4, 5. What does this mean? What does this mean? Guys, this means we've got some further upside for gold still, but when it comes to this overall cycle that gold's been in since the 70s, we're likely nearing a top on that. Okay? Yeah, no, Andrew, don't tell people to short gold yet. No, not yet. I believe we still got a bit higher to go. But in the grand scheme of things, it likely, and guys, this is what? This is a 30, 40, 50-year chart here. If we're talking about a correction on a 50-year chart, we're talking about a multi-year correction overall. Okay? I know I'm breaking your heart with gold. I know. It's tough for people to see this, right? And here's the reason why. I'm going to tell you why. Because most of y'all are pretty new to markets, and most of y'all came into markets through crypto, which means you're following the whole, the dollar's going to hyperinflate, and it's going to come crashing down, and big government evil, dollar evil, Bitcoin is the only good thing in the world, whatever. You're going to go through that. But that's been your introduction into economics, right? For most people, your real introduction. And so when I say, oh my God, gold's going to come down, we talk about Bitcoin being digital gold. People have talked about that, right? And so that automatically gets people very offended. Now, don't be offended. I'm not saying gold's going to never go up again. I'm saying there's a good chance we're likely nearing the end of a 50-year, 50-plus year rally. Now, that doesn't mean it needs to end this year. It could. But what I'm talking about is sometime between now and the next few years, that gold top is probably going to be in. What does that mean for Bitcoin? Well, your initial thought should be that if gold's going to correct like that, then Bitcoin has a greater chance of correcting as well. Now, that's your initial thought, okay? That is the correct way to think about it. But what happens between now and gold making that correction is what matters. Because the more that Bitcoin is brought in and becoming part of that global financial base layer, the more gold or the more Bitcoin comes in as that absolute best kind of security for loans, stuff like that. The more that comes in, the less likely it could be for Bitcoin to pull back when gold does that pullback. We could see Bitcoin continuing kind of what it's been doing over the last few years in this cycle, which is just push up higher, sideways for a while, push up higher, sideways for a while, rather than some 70 or 80% correction that we've been looking at, right? And I know I've promised you guys that I'm going to have my thoughts about Bitcoin and super cycle versus, everything else coming up here. And I have not finished that. I've had some personal things over on my end over here. So I have not been able to finish that up, but I'm hoping maybe this weekend I'll get that out. So if you are subscribed to Hash and Hedge at hashandhedge.substack.com, look for it this weekend. I'm going to do everything I can to get it out this weekend. But that'll extend more into these thoughts here and what I'm looking at for Bitcoin overall. But your initial thought should be, if gold is finishing, it's 50+ year rally, then your base case should be, okay, Bitcoin probably starts pulling back too. But again, what happens between now and that time is going to be a much bigger determinant of whether that happens and to what degree Bitcoin actually happens to pull back, right? So the other thing is, if gold is pulling back like that, an even stronger correlation you should be looking at is that the dollar should continue higher. Now, I hate to break it to you, if you think the dollar is going to hyperinflate, well, that kind of pokes a big old hole in your bucket, right? Listen, guys, there is a significant bit of difference between the US dollar today and Weimar Germany in the 1920s, all right? Everybody wants to throw that up. Everybody wants to throw up Venezuela and everywhere else where you're getting hyperinflation, but nobody's thinking. They're not getting beyond the nose in front of their face. None of those are reserve currencies. Now, I'll give you a little insight into what's going into my Hash and Hedge article that I'm going to be writing when it comes to what I think about the dollar. Okay? I think the dollar does continue to lose a bit of its dominance. Okay? I think we're coming to a more multipolar world where we're going to have more competing currencies. Does that mean the dollar hyperinflates? No. Does that mean the dollar dies? No. But it means it becomes lesser and lesser of the grand scheme of things. Okay? And that just comes with the whole geopolitical thing, everything else that's going on as well. There's a lot of moving parts in that. And when I post this, I may get some of it right, I may get some of it wrong, but the idea is to look at holistically what I'm talking about. Okay? So when we're looking at that, these are the things you have to keep in mind, okay? If you are really strongly of this opinion that the dollar is going to going to hit hyperinflation and it's going to die and all this stuff, I'm telling you now, that's the least probable case right now. It doesn't mean it can't happen, but it's the least probable, least likely case. Back in 2020, I think it was, Jack Dorsey made that post. The beginning, or not the beginning, but that the dollar was going to hyperinflate, and that's the end of it. And at that time, I got a lot of flack because I said it's not, or he said it was hyperinflating at that time. It was going to, die off. Basically, is what his post said. And I said, no, that's not what's going on. I got a lot of negative comments for that. It's on Twitter somewhere. You can look it up. But I stand by that today. That was 5 years ago, I think, about when that came out. And it hasn't happened. The US dollar is not even hyperinflation at the moment, guys. Okay? If you think it is, then you really just need to stop thinking it's going to hyperinflate, because you don't even understand what it means to hyperinflate, okay? Just because inflation's rising doesn't mean that the dollar is going to hyperinflate. Just because the Fed did all this extra spending, all this dollar creation, right? And the government's doing all this extra spending, doesn't in and of itself mean that that's the end of the dollar and what's going on. And that's the point most people are not understanding. The good thing about what's going on is it does open up what we're seeing with Bitcoin. This continued adoption more into the mainstream, the idea that it becomes part of that base layer of the global financial system, the idea that it becomes that best loved, what do you call it, collateral for loans. Think about it. If you're a bank and you're loaning money, Bitcoin is the easiest, absolute easiest thing that you could loan against. You can set it up in a smart contract where it's automatic when whatever things hit and your loan's done, right? And it automatically gives it to the bank. The bank has it then, right? I mean, there's no safer way as far as taking ownership of pledged collateral than it is for like Bitcoin. And the fact that its adoption continues, much more mainstream with Wall Street and whatnot, gives it extra oomph if you're a bank. That's why these banks, the kind of fringe banks right now, but it's still, they're starting to accept Bitcoin for collateral, for mortgage loans, stuff like that. Okay? Yeah, here comes Fibbo. What did Fibbo say here? My man showing up here. It would take a collapse in confidence plus political monetary mismanagement plus the loss of the dollar's reserve status plus supplier debt shocks to create U.S. hyperinflation. Yeah, exactly. It's not just about printing money. And that's the thing that people get wrong, right? If you don't have training in this or some kind of understanding of what's going on, right, you're going to think, oh, it's just about, printing more money. But here's the thing, guys. You can continue to print more money. I mean, everything else held the same, right? You can continue to debase your money as long as GDP keeps up with that debasement to some extent. It doesn't have to be a one-on-one, right? As long as you're having greater productivity, your value of your fiat currency can actually drop and continue to drop. But of course, there's a whole bunch of other things else involved. But at the simplest thought, I mean, That's what it is. So just simply printing more money. And oh my God, we printed so much more money in the last 5 years than we printed in the whole history, blah, blah, blah. Yeah, I know it's great talking points. But what does it really mean? What does it really mean? See, that's the thing. Most people don't understand that it really doesn't mean much of anything in and of itself. Now, does that mean we should continue to print just exponentially greater and greater? No, not necessarily. But it means that if you're going to try to analyze that printing that's going on, you have to, bring it down to brass tacks. You got to understand what you're talking about. Not just that money printer go burr. Oh my God, the dollar's going to die. Okay. Andrew's bringing up, he says, what's really changing is the stablecoin conversion from cash to digital. See, there's another big point of this. Stablecoins are huge, right? And they're bound to get huger. Or as Trump would say, huger, right? They're bound to continue to increase in significance, which means increase in size, which means increase in, guess what? The amount of treasuries that are being held by these companies. Now, right now, it's still a small part of the overall what's held, right, by foreign governments and everything else. But it's increasing. And as long as it continues increasing, that's kind of, how stable is your currency? Well, we've still got people buying the treasuries. So as long as you still have people buying them, things aren't as bad as what people want to shout out. You have to understand, especially when it comes to social media, people are out there to just say the craziest things to get you to click on their links. Sometimes they actually believe it. A lot of times they have no clue what they're talking about. They get ChatGPT or something to write something up for them, guys. Surprise, surprise, right? Surprise, surprise. So, again, as an intro into what I'm writing here and what I'll be publishing, the idea is that the US dollar most likely will continue to lose its dominance, not lose dominance, but lose the great amount of dominance it has, right? As the world becomes more multipolar, which means more competition against currencies, right? Which again gives even more support to the idea of Bitcoin coming in and stabilizing that financial, the base layer of that global financial system, of becoming that thing, that asset that banks that are loaning, that collateral that banks are loaning are looking for. Okay? So again, if you're not in Bitcoin, I think you're missing the boat here. Let me see here. TSLA. I talked to you guys back here when we were back down here at $300 about the idea. It looked like we had a triangle here. And we're heading up to a pattern target of at least 407. So far here, we've hit about 353, 355, right around there. So almost a 20% rally off this low over here so far in a month. This was the beginning of August over here. And we should continue, again, we should continue up higher here. Breaking out above 357.54 is going to add confidence to this triangle pattern. And again, based on the height of the triangle pattern, we do have a pattern target. Well, actually, we have, let me see here. I was looking at this as a 1, 2. If this becomes a 1, 2, 3, 4, 5, maybe as a leading diagonal, we'll be a bit higher than 432. We'll come up a bit higher, maybe up there around 438, which again gets us where? It gets us right toward the all-time high up here. Generally speaking, when you're doing Elliott wave, you're looking at 5 waves up right around the previous swing high. So you get your 1, 2 here, you get your 3 or 4 as a triangle, and you get your 5 up here toward that all-time high. And guess what? If that's 5 waves up that doesn't break out, you're going to look for 3 waves back right here into this triangle. And then you look for 5 waves more to break out. So, Tesla continues to look good. It continues to do good. Like I said, we're up there about 20% almost in the last 30 days or so. Let me see here. What else we got? Ethereum. So we've got this pullback. So we have this all-time high up here now. Up here at around 49.55.90. It did not take long for us to finally get that all-time high, did it? Remember down here when everybody was crying? Oh, it's the bottom. It's going low. Or it's not the bottom. It's going lower. It's never going to go up. Even here, it's never going to go up. What did it do? It quickly continued going up. Guys, you have to understand, we went from this swing low here at around just under $1,400 in, what is that? April of this year, right? April 9th. 5 months later, we almost hit $5,000. New all-time high. While everybody cried and moaned and whined about how the top was in, all the silly nonsense, right? But I've been adamant about the fact that we were going to hit a new all-time high, and even now that we're going to go up higher. Right now, as long as this 42, 34, 12 area holds, we should be headed higher. Let me see here. If we can get a break, I'm looking for a breakout right now. Let's see here. I'm looking for the low to hold down here at, let's see here. I'm looking for this low to hold here at 4,062.24 on this Ethereum USD chart here on Coinbase. I'm looking for that to hold and for price to break out above 46.44.43. If we can get that, my target I'm looking for from the current low we have right here from Monday would be up here around 62.90, 66 is my next kind of target up. That would give us 1, 2, 3, 4, 5 without any overextensions or anything else. So yeah, I mean, that's where I'm looking right now. Okay. That's where I'm looking. Russell minis on the weekly looking pretty solid. Let me see here. What you looking at there, Andrew? We can just pull up the Russell here. I haven't pulled up this particular chart, I don't think, in quite a while. We'll just go ahead and pull. Let me see. Yeah, we'll just pull that up there. These are actually the futures here on the 1 month. Yeah, so we've got this nice, this nice V kind of recovery here off that low for sure. When we were down here, you guys may remember I was talking about this accumulation here, looking for the breakout higher. We got that, and then we got the pullback. But look on the monthly here. It's 3 waves on that pullback. Okay. So we got basically what amounts to a, let me see, I think this was the low here. So we've got basically a 1 and a 2 here. So the small caps, if I'm correct here, and that's a 1, and that's a 2 back there, that gives us 5 waves up around 38, basically 38, 39. Now, why is that important? Because this is a small cap. So what does small caps matter, Chris? Because the small caps are more, what's the word I'm looking for? They're more sensitive to things that are going on in the economy. So if the economy is doing really bad, then you're usually not going to see the, like the Russell 2000 rallying, right? Yeah. So if you're wondering what the economic health of the U.S. economy is, a general good place to look is the Russell 2000. Your small caps, right? It's made up of them small companies that are mostly U.S. based. So again, they're very much more sensitive to what's going on with the economy here. So I've been very bullish on them since, those of you that have been following me know, since we've been down here. Yeah, right around this area here. So that's at, almost mid to mid 2023. Had a good rally up, a nice pullback there. Monthly candle, you've got this capitulation, large lower wick, support at the yearly R1 or the yearly S1 pivot. Then we've got our breakout here. We're about to break out higher, guys. So, look at small caps. Look for small caps. I think it's a good kind of place to be as we go forward. Overall, now this is the monthly chart. But yeah, we can jump back to the weekly. Let's see here. Weekly says we're probably, we could be nearing a top or at least a local top and get a pullback. If we're topping out around here, even as a local top, I think, we look back here toward, 2,200 around that area at least. But we'll see, it may be done or nearly so. If we continue pushing up, we're looking up here around 25.16 or so as that next target on the way up. This is a great V-bottom recovery here. I'm not hating it at all. I like what I'm seeing. This looks like this could be a 1-2. Could be a 3, a 4, and a 5 here. Or it could be a 3, and then we get a 4, and then we get a 5 up. So just a quick look here. But again, overall, we should continue higher in the long term. Right now, be a little bit more cautious. Daily here. There we are. We're just coming in sideways between the pivot and the R1 on the monthly. If we impulsively break down through this 2305 area here, then we can look for a target of 2211.5. And from there, I would see if we get a rally back up and do it. Otherwise, if we can get a pullback here and a rally back off, we should then go look to rally up and, maybe get up here around 2715 or even head up toward 3000 up there. But nonetheless, overall, the small caps are not telling us that there's a whole lot of concern yet for what's going on with the economy. And that's compared to what everybody else is talking about, when they're just looking at all the other stuff, okay? Look at where people are putting their money, folks. Look at where the money's going. That's why I always talk about charts. That's why I teach charts. That's why Fibbo teaches his method with charts, right? We're big chart guys because we know that the first place you're going to see how people are feeling in the aggregate is the markets. If they're scared or worried, they're going to be taking money out of the markets and shorting, right? If they're not so concerned or if they're feeling good about it, what are you going to see? You're going to see them put money into the markets. Risk off versus risk on, right? Most people don't look at it. Most people are like, oh, technical analysis is astronomy for guys. Shut up. You really have no clue. That's the problem, right? What you're mapping with technical analysis, if done properly, is humans. And humans ultimately decide where the money goes. But Chris, what about all the algos? What about them? They're based on what humans do, right? They're based on this understanding of how humans act and react. So just because it's done by an algo doesn't change what makes the algo do what it does. Does that make sense, guys? Solana. Let's see here. What do we got here? Right here. Let me see if I can get rid of this now. There we go. Got a whole bunch of stuff on here. Solana, this is the daily. Let's zoom out a bit here. Let's look at the weekly. Okay. let's look at monthly. Well, monthly's got a lot of room there. So again, we are effectively sideways since back over here in March of 24. Okay. Rallied up. We had, inside. We had a slight deviation to the upside, slight deviation to the downside. Now we're rallying up. When we're looking at the volume here, this looks a lot like reaccumulation here, guys. So that's how I'm treating it. So you have your preliminary supply coming in, buying climax, automatic reaction, selling climax. Get a little bump up for ST and phase B. Then our dip down into a spring. A nice large lower wick. Support at the yearly S1 pivot. It's absolutely beautiful. Rally up into the the yearly pivot. Pull back into the support right here and broken out above it. Now we're at the top of the range. Ultimately, to me, this looks like reaccumulation. Overall, this looks like 1, 2, 3, 4. We're getting a 5 still in here. So based on 5 coming out here, minimally, we've got a pattern target based on the height of this pullback at 554. So minimally, I'm looking at about 554 for Solana. Okay. Now, depending on how 5 waves works from here, right, that could end up higher. That could end up closer to 837. But for me right now, based on this structure, 1, 2, 1, 2, 3, 4, 5. 3, 4 is a flat. Working on 5 here. That 554 area is looking pretty good for me. Okay. I mean, it's just a nice, clean run. It's such a nice, clean run. Guys, if you bought back here, when I said when it was a good time to buy back here when we were just around $9 and change, I mean, my God, guys, you'd be so well off right now. Understanding structure here with that volume and price action relationship here, which is what we teach, guys. It's what I teach every week at the TWC Trading Academy. Learning that should have had you, if you weren't long, should have had you buying long in this area. Okay. You'd be up maybe 100% already. Understanding that should have you still holding if you got in down here, again, understanding, teach about the range here is the same thing we teach here, right? There it is. Even though they look different, there's still reaccumulation based on that volume and price action relationship at specific points within this range, right? That tells you a lot more than people's feelings. That tells you a lot more than unlocks or whatever, right? Because remember, everybody was saying Solana to 0 here. Just about everybody was saying that. Doesn't look like it went to 0, did it? Your return, had you bought and held from there, from when I said that, right, was right up here around $9 and change. We'll say right about there. Right now, you'd be up 2,021%. From $9 to $200. And if we go up there to the 200% up here, or the 1618, we'll say, you'd be much closer to 5,846% of a rally. You'd be $546 up from $9. And so people get in there, and when they look at TWC, they go, oh, expensive, right? Everybody thinks of things in terms of money spent rather than what they're getting for that money. So not only do you get to learn how to find stuff like this for yourself, but we're usually uncovering multiple things like this, multiple times a year. It just takes one to hit to pay for your year and so much more, right? I talked about one. I gave one yesterday on the market wrap. And if you're not in today and you decide to join today, you can still access that. But I gave one potentially generational return. So that was just yesterday, and this is, again, if you've been following me, I've called bottoms on what? Since the beginning of the cycle: Bitcoin, Ethereum, Square, PLTR, Hood, Sol, Link. I can't even remember all of them, guys. PayPal. So many of them. So many of them, right? All you need is one. All you need is one to make way more than you'll ever pay for a year at TWC. But see, people don't think that. They're like, oh, it's just the money going out. Well, you know, as long as you continue thinking about that in your life, what you've gotten in your life is what you're going to continue to get. You have to look, if you're going to spend money, don't look at it as, oh, I'm trading this for nothing, basically, right? You got to look and go, am I going to get it? Am I likely to get a return on it? What kind of return am I looking at? And you're getting return multiple ways through TWC. One is, again, through the idea that you're going to learn to do this. And if you think you can't do it, then don't join, because as long as you think you can't do something, you'll never be able to do it. But all you have to do is believe that you'll be able to figure it out. And if you do that, you come in there and you're put in the work, ask all the questions you want. I will ask them all happily. Not just me, Andrew, Vince, Fibbo, our members like Jonathan, Mr. Austin there, like Sats, like Bernardo. I know Bernardo comes off as a cut up in here, guys. I know he does. But honestly, he's figured out a lot. You know, and these guys are in there and so many more are in there, and they would love to talk charts with you. They would love to talk charts. They love doing it, right? So not only do you get to learn how to do it yourself, and then you can, for the rest of your life, figure it out year after year for yourself where these are, but you also get when I'm finding them and you're finding out. Sometimes I put them publicly. Most of the time I don't. And like I said, we've got multiples here. Again, I'm gonna keep talking about our best one we ever did. A few years back was something called Naked. That was the stock ticker. And it was down at around 8 cents. And I said, this looks like a generational bottom, a cycle bottom, just a low here, right? And we had some members who got in around 8 and 12 cents. Now, some of them got out at around $1, which came actually pretty quickly. Got out at around $3, $10. That eventually went up to $50, $51, or $53. Now imagine if you had gotten in at 8 or 10 cents on that and just rode it up to anything, even at $1. You made 10 times your money. And like I said, it happened pretty quickly up to $1. We really came in well positioned on that. $3, 30 times. $10, 100 times. If you happen to just have the wherewithal to hold through $50, I mean, geez, oh whiz, 500 times your money, right? Now, I can't guarantee we're going to come up with that every day. That's absolutely the best one we've ever done. But again, had you gotten in around, Hood at around $7, like we talked about, would you be upset? Have you checked out what Hood's price is right now? PLTR. All these ones. So, again, guys, if you're going to go out there and look at spending money to learn to do something, don't look at it as a sunk cost. It can't be a sunk cost. You have to look at it as, okay, I'm looking to trade this money to actually learn how to do this. And, in our case, along the way, potentially find a few of these a year with us. It only takes one, though, right? It always takes one. So, guess what, guys? Even if you don't go with us, and I know people, they hate it when I say this because it's like, oh, you don't believe what you do. No, sure I do. But I'm not here to convince you to join us. Either you're going to or you're not. That's all there is to it, regardless of what I say here. But if you even join somebody else, you have to think of it the same way. If you're going to go into somebody because you want to learn how to do a thing, but you just buy into them and you don't actually do the work required, you're never going to get the return. You got to be willing to jump in there and do it. We work with serious traders over here, people who are changing their lives with what they're doing, people who are able to spend their days trading now rather than working. Some of them have chosen to do that. We got others who, are trading And they're using it to fund their retirement accounts and doing really well with that. Okay. Gray, what's up, man? You remember me calling the $9 bottom? Still have it a large part of your holdings? I love it. I love it. You know? Yeah. Andrew says STEM is one we've been watching for a year or so. Yeah, see, it's another thing. Sometimes we'll get fixated on something and we'll watch it for quite a while, right? Let's pull up STEM here real quick. I don't know. I haven't looked at it a while myself, but I know Andrew's been, as he said, paying attention to it there. Let's see where we're at here with STEM. Let me set this up. Again, by the way, guys, if you're not doing this, if you're not setting up new charts, for each thing you're doing or whatever, and you're just overriding old ones, you're doing yourself a real disservice. Okay. I have charts from just about everything. And that's the great thing you get over there at TWC is I don't like delete anything. Once they're posted, they're there. You can go back and check them a year later if you want. And there isn't anything to hide. If I'm wrong, I'm wrong. That's why we talk about the proper risk management so much, right? You're learning how to be a holistic trader at TWC, not just a one and done, a pray and spray, stuff like that. Look at that monthly. Look at that monthly right there. Man, oh man. Yeah, we've been talking about it since down here around that $6, $7 area, which it's hit a few times here. Where's that low? That low right now is this one right here. I mean, just a real quick look here. This looks like this could be 1. And then a flat is a 2. And then maybe a 3 and a 4 here. Potentially a 5 up. Generally speaking, just visually based on what's going on with here, most often my initial thought is we're going to break out here and rally up toward this 27.5 area, $28 area. There is supply sitting up here in this wick, which would get you rejected as well. But then you'd have like a 1, get a 2 on that pullback down here, 3 on the next move up. So overall, I'm liking STEM here. I think we probably break out higher here just based on a quick look here. And we rally up toward this $27, $28 area. Then we pull on back down here, maybe around 13. What would that be? Yeah, right there around $13. Pulls right back in this high volume node, right here at this previous resistance support level. Boom, boom. Why does it do that? I teach that every week. Every week. And not just, a lot of guys that you get on here, they'll teach you how to do something, but they have no clue why it's supposed to work. Or if it does work, why it really works, right? They just say, listen, you're supposed to do this. And I guess that's fine, except it's not really, right? The more you understand about why it works or why it's supposed to work, the better you'll be at deciding when people come up and say, hey, listen, I use this strategy. And you can look at it and go, yeah, that's not really going to work consistently. Because you understand how and why prices move the way they do. You understand how to read it. You understand why liquidity develops where it does on the map, on the chart. At the end of the day, that's my goal to teach you. How to understand how price moves, how it forms liquidity, and why those things are happening where they do. Because once you do that, you can use any way that somebody's trading or any indicator, and it makes it infinitely better. Infinitely better. There's no indicator out there that gives you 100% win rate, guys. Matter of fact, most of them, if you're lucky, will get you 50%. And if somebody has a back test that says, 80 or 90%, most likely it's a specific time period they've used. Not like the full, like you look back 20 years and it's been 80 or 90% for 20 years. No. So how does it really help you? Well, you have to determine when are the right times to take those trades. Especially if price is if the trades are consistently wrong, right? You just get into a period where price action isn't moving the way you need it to. right? Understanding how and why liquidity forms on the charts and where that's going to happen most likely, and how to then not only see, it's not only enough about understanding that and how to read the chart, but you also need to learn, okay, so how do I actually trade it? It doesn't do you any good just to learn that these things are this and that, and that's it. You have to figure out, well, how do I actually trade it? That's the final piece. And we talk about that time and time again in our weekly trainings. I'll give you, I'll give our students, I'll say, listen, we've got this setup here and this setup here. Both are legitimate, but why is this one better than this other one? And we'll discuss it. Why? How are we approaching the chart? Okay? That's important for you. But again, guys, I'm telling you, don't join if you're not serious. I know nobody else actually says that, right? We just want you to join. They're just making their money in the memberships. That's it. Not worried about it, right? I am worried. I want you to be successful. I don't want you wasting your money. If you're just going to waste your money, spend it on experiences. If you're just going to waste money, just put it on experiences, guys. Do things that are going to give you great memories. But if you're serious about wanting to understand markets and how to trade them and how to approach them properly and proper risk management, all these great things, so that you yourself have the chance to become a consistently profitable trader, which, guess what? 95 to 99% of retail traders never get anywhere near, right? We know that, right? Then you got to stop doing what all the free information out there says to do. The repetitive free information, the things you see the same people say over and over and over again. It's the same stuff that was out there when I first joined and before that, or when I first started trading and before that. And they're half-truths, sometimes outright lies. They don't really work. But, retail traders want something for nothing. And, you get what you pay for, guys, generally speaking. A good rule in life is generally you're going to get what you pay for. If something is available freely, the same thing, everywhere, well, it's probably because it's not worth much. Right? Again, guys, just ways you need to think of this, ways to look at life and the things that you do, right? Mark, my favorite Canadian. Sorry, Roy. Roy, you're my second favorite Canadian. He says, get what you pay for and get out what you put in. Exactly. Not just in trading, but in life, guys, in every area of life. Relationships, your job, your business, whatever it is. I'm going to be as real as the day is long with you guys. I'm never going to tell you what you want to hear just because you want to hear it. I'm always going to tell you what you need to hear, because I assume that if you're listening in, if you're joining us, if you're doing those things, that you're serious about being a consistently profitable trader, which means most of what you think about markets and the way they should be and the way they are and all this stuff is going to be wrong. It's basically the way that most retail traders think when they first come in, myself included, 31 years ago. So learn from me. Learn what not to do. Learn what's wrong and what's right. Learn how to view it. That's what you're talking about, right? How much money do you have invested? Oh, it depends on what? We have lots of things. Now, I'm not going to be stupid and come out here and tell you all what kind of money I have completely invested. Why would I do that? How much sense does that make? I mean, I don't know. I don't understand why people do that. They come out here and they're like, oh yeah, look, here's exactly where I live. Here's how much money I have. Oh my God. That's like just asking to get robbed or worse. No. But I've been doing this this is the 31st year that I've been doing this. Okay. Because you don't take your financial advice from broke people. Yeah, you do. Y'all do it all day long online. But doesn't matter. Here's the other thing to think about. It doesn't matter what that person does, right? It matters is, do they have results? Yeah, we've got lots of results. I've shown them time and time again. People like Mr. Awesome, He'll tell you what. He'll tell you how he does. Sats. He'll tell you how he's done since he joined. Alvin. It's late for Alvin. He lives over in New Zealand right now, or Australia. But yeah, he's one of our biggest proponents out there. He'll tell you exactly what he's done since coming in, right? Can I tell you where I keep my money and give the 24 words of the wallet? No. But yeah, credibility should be in, do people actually, does it work? Because I can trade all day long and I can teach what I do all day long and it works for me. But if it's not working for other people, then what good is it? Right? These are the things you guys need to figure out. Most of y'all are just here for dopamine hits. You're here to live your life through other people's eyes, right? There's a reason I don't put much personally about me out there. Exactly where I live, the cars I drive, stuff like that. There's a reason. Other people get out there. See, here's the thing. Y'all get caught up and you see that and you go, you're living vicariously through what that person is trying to show, right? Which, what do we find out? We find out a lot of these influencers who are doing that are renting the property for a day or for a few hours to film stuff. They're renting the cars for a few hours to film stuff. They spend a few $1,000s, look like they're loaded. How does that help you? It doesn't help you. But are people learning? Are people being successful with your teaching? That's what you should be interested in. My favorite, in a van down by the river. That's my favorite. Yes, yes. From Carrillo Motors in Fort Lauderdale. Is that one of those places where you can rent them out? Yeah, they got a lot of those. You can rent them for the hour. You pay like $1,000 to rent a Lambo for an hour, something like that. The return on investment ends up being pretty big because people come in and they're not really interested. They really think, oh, well, maybe I can do this. But what they're really interested in is, oh my God, that lifestyle. And they think that they're guaranteed to get that lifestyle. But my other thought along this way, and something I talk about often, is, are you trying to become a trader just so you can blow all your money? Or are you trying to actually create generational wealth as a trader or investor? Are you trying to set up your family and your kids and your kids' kids? Because that's going to have a whole different take on what you do with your money, right? Does that make sense, guys? So again, when you're looking out there, if your reason for joining somebody is because they're flashy, I would be a little concerned about that. Because again, it's very easy to fake flashy. Cost a few $1,000s. You can look like you're living in a $12 million home, driving, you have multiple multi-million-dollar cars, $100,000 at least, $500,000, right? And it just cost a few $1,000s to do that, a day of recording and a few $1,000s. And then you get in there, and I hear about these people all the time who've got these. They're like, oh yeah, we're gonna put out. You need to buy here and you need to sell here, and then they like change that, right? They like edit it or whatever. But again, you don't get that with us. I say, no, here's what we're looking at. Here's why. And here, not only here is the entry and here's the target, with the charts that we update and chart requests and stuff like that. I also say, listen, if it breaks down through here, you need to be out. And here's why. Right? But again, the biggest thing I think I probably bring to this whole space is that I don't blow smoke up your rear end, guys. I tell you what you need to hear. Living, life as a trader and investor, I think is absolutely amazing over time. Especially at the beginning, it can be tough, right? Because you have to build up to get there. You're not getting rich overnight. If you're joining somebody like me or somebody else because you think it's going to teach you how to get rich overnight, stop. You're wasting your money. That's not the way it works. Trading and investing is a marathon, not a sprint. It's never about a single trade or a single investment. It's always about how do you do it over time. That's what you're looking at. Can you build it over time? Can you, continue to increase over time? Right? So yeah. Let me see here. So anyway, yeah, so that's what I'm thinking here, guys. As we kind of get through all this, again, if you're new, I don't think I sound like anybody else out there. I try not to. I try to be realistic. Realistic with you. I treat you like adults, not like, I don't know, not like children who need to be told, need to be gentle, parented. Again, it took me, these things I talk about, these changes in thoughts and emotions and how to deal with things. I had to learn all that on my own and deal with everything that y'all are dealing with as well. And I've learned how it works, right? That's what I've had to learn. And that's what I share with you guys, the reality of trading. You're not going to win every trade. Sometimes you're going to get in stints where maybe you just have a 20 or 25% win rate. It happens. But again, if you're viewing trading as a marathon, not a sprint, and you're utilizing proper risk management every single time, those are nothing but little bumps in the road along the way. If you're doing anything else, if you think, oh, he doesn't know what he's talking about, he just didn't know how to do it, you feel free to waste your money somewhere else. And then you can come see me when you're done wasting your money. But you got to put in the work, guys. You got to put in the effort when it comes to learning how to trade. It's not just going to happen because you bought in with somebody. Okay? Does that make sense? All right. Anyway, listen, we're in here longer than I thought we would. I'm going to get out of here. Again, the promo code is 55OFF, 55 off. Get 55% off our liquidity cartography stuff, which includes access to what I teach. It includes access to what Fibbo teaches. It includes access to Andrew and Vince's analysis and their charts and what they're looking at and what they're trading. You get 3 training sessions every week, hour long, or sometimes a little bit longer. You get 3 live trading sessions with me. I trade live 3 days a week. You can jump in there with that. You get to see, all these great people that are in there that really are great. They love to talk about trading. They'd love to have you in there learning and growing with them as well. But again, guys, if you're going to get involved with us or anybody else, you got to be willing and ready to kind of put in that time. Otherwise, it's a waste of money. And I'm just a firm believer in life. Life is too short, guys. I'll be 51 in a few months. Life is too short. So if your intent is just to get in there and then just not do anything, save your money, spend it on experiences. Take vacations and trips. Spend some time with family and friends. Go out, do some things, Those are the things that are going to pay off at the end of the day. If you're doing this, hopefully, the goal is that you can make the money to create the freedom for yourself so that you can make many, many more experiences than what you would normally be able to make. The only real freedom in this world, guys, despite what your governments tell you and what they allow you to do, right? That's not real fun freedom, right? That's permission. Real freedom is money. What you often see in movies as FU money, right? It's that amount of money where you get to that point and you can basically do what you want, when you want, where you want. You don't like the country you're in, your government says you can't leave, guess what? Doesn't matter what your government says. People find their way into the U.S. illegally every day. They pay coyotes to bring them over, right? If you have the money, you can do what it is that you want to do. Money is real freedom. Freedom from time, freedom of time, freedom of location. And with those things, again, you can create many, many, many more, memories and moments. Okay? Spend money on women and cars, experiences, Grace says. Whatever it is that gives you the experience that you guys want, right? All right. Anyway, at the end of the day, the only thing you control is how much you lose. So please keep working on that risk management. I really, truly hope you guys have an amazing weekend. Y'all trade safe. Be ready for next, is it next week or the week after? Maybe the week after. I got to check again when the Fed decision comes out. And then we'll move on to the next biggest, whatever, news event comes up, right? All right, guys. I appreciate you all joining in as always. Do me a favor, hit the thumbs up, hit the like, hit the subscribe, share the link. Appreciate that. And we'll see you all over there in TWC, all right? Take care, everybody.